Are you wondering how you can pay less taxes in your business without doing something illegal? There are plenty of legal ways to reduce your taxable income, and that's what we're chatting about today. I'm Vander, an attorney turned entrepreneur who helps online coaches and service providers legally protect and grow their online businesses using my DIY legal templates and my Ultimate Bundle program. You can catch me here each week on YouTube sharing fresh legal tips on how to legally protect your online business, as well as learning how to grow your online brand. If you haven't yet, hit subscribe below and ring the bell to make sure that you get a notification every single time I post a video each week. In this video, I'll help you figure out a few easy ways to reduce your taxable income, aka the amount that you're going to have to pay taxes on, by figuring out what you're probably doing already or what you could be doing to legally reduce your taxable income. Let's dive in. Okay, the first thing you want to do whenever you are concerned that you might be paying too much in taxes or you just want to pay less in taxes is figuring out if your business is structured properly or the best way for you financially. So are you already an LLC? Have you even registered your business? Those might be good things to address first and foremost, because if you have a business, if you're starting to offer any sorts of services or selling products online, and you're concerned that you're paying too much in taxes or want to pay less, then the first thing is to make sure that you're capturing business expenses properly. And you have to have a registered business in order to do that. So if you haven't already considered becoming an LLC, or if you've just started exploring that, that might be the best first step for you in making sure that you are reducing your taxable income by capturing all those expenses properly. If you've already registered your business as an LLC, but you're currently being taxed as an individual, otherwise known as a sole proprietor, then you want to maybe talk with your accountant about becoming an S Corp and whether or not that's a good option for you, because that is a good way to reduce your taxable income. And I will leave that to a conversation between you and your accountant. It is highly dependent on your business, how much profit you're making, your salary, whether you're able to start paying yourself, all of that kind of stuff. But that might be something to explore if you haven't already explored the option of becoming an S Corp filing LLC. The second way to reduce your taxable income legally in your business is probably my favorite, which is buying anything that you actually need for your business. So if you are, you have too much profit, you already know that you're going to be paying too much in taxes, and your business needs tools or equipment that would help you grow your business, then now is the time to invest in those things. Don't keep waiting, right? So whenever we need, maybe a new computer or a camera, a better mic, you want to start a podcast, or you want to upgrade the tools that you're currently using, I would highly suggest in investing in those things when and if you need to reduce your taxable income. Now, remember, it's not a dollar for dollar reduction, right? So if you spend $1,000, it doesn't just reduce your taxes by $1,000, because we have percentages that go into different tax brackets. And that's a whole really boring YouTube video that nobody wants to watch. But it is helpful to, if you need those tools anyway, I would do that. I wouldn't just go on a shopping spree if you don't need it. I'd rather just pay the small difference in taxes and have the rest of the leftover in profit. But when you need them, it's a good idea to invest and not just keep putting it off. Now, as it comes to the close of the year, I always am, looking, and my business has grown a lot exponentially in the last several years. So as the business has a significant amount of profit, I'm always looking at the end of the year as to what else I hadn't invested in that I forgot about. So this year for me, it was a new camera. I guess I knew I wanted to start upping my YouTube game and having better videos. I also wanted to invest in a better pair of headphones that I use for my podcast recording. So just stuff like that, things that I needed, right? I mean, I guess technically you don't need this stuff, but you know what I mean? It helps you in your business. And so anything that's legitimately related to you running your business could be a great way to reduce your taxable income. The third way to reduce your taxable income in your business legally would be to start hiring some help, start delegating. If you haven't hired people already, whether you hire them as contractors or employees, these expenses, for which you'll pay for their hourly fees or their retainers or for their salary if they're an employee, will help reduce your taxable income on the business, right? So the profits of your business. And double dip, this tip also helps you to actually get more stuff done, be a more centered and relaxed entrepreneur. Take it from me, I went from about a year and a half ago having no one to having a full team of people now. And yes, of course, that has helped my, my expenses, right? And paying them to do this work. But it's also helped generate a lot more additional revenue in the business and kept me relatively sane in running my own 7-figure business and trying to, continue to grow this thing. So hiring people can really help you in order to reduce those expenses, but also keep you sane. The fourth way to reduce your taxable income is to invest in your retirement accounts. So I know so often as an entrepreneur, and specifically like an online entrepreneur, we can sometimes forget that we have to invest in our retirements, right? Maybe we feel like we can do this stuff forever. But I will never forget, by the way, when I was an attorney and working at a firm, they had a retirement, investment expert come in and they talked to us about like how much we should be setting aside from our 401k and the company match. And then they showed us this chart as to like how much you would invest over time and maxing out your investments, what age you would be when you would retire. And I remember to this day looking at that paper that the guy gave me and being like, hell no, I will not be here when I am that old, right? So that was such a good sign to me that I didn't want to be an attorney working at a firm for my life, right? I was like, I am not going to work here until that age to retire. Oof. So it was important to me that when I started an online business, once I got my feet under me, I started to max out my retirement accounts, right? If you're more in the beginning of starting your business, I would just get your feet under you and start to get those things set up and maybe even setting up automatic deposits. But as soon as you're able, it is a great idea to max those out. I also want to encourage you to talk with your accountant about what the best kinds of retirement accounts are for you, right? And then how you can be maximizing your deductions and reducing your taxable income by maxing out those accounts, having different types of accounts, all kinds of things. You could even chat with your accountant about whether, given the kind of business that you have and the way that you have it set up, whether an HSA, a health savings account, could also be an option for you, because that's another great way to reduce your taxable income. The fifth way to reduce your taxable income in your business, and this is something I want you to chat with your accountant about based on, maybe what's happened in your business this year, is whether or not you qualify for R&D credit, so research and development tax credit. So if you have really worked on something and you've created something, and this was a year where you had to put in a lot of resources and investment into creating something new in your business, it might be worth exploring with your accountant whether or not you would qualify for the R&D tax credit. The sixth way that you can reduce your business income legally is by investing in programs and mentorship and courses that are actually helpful to you, either as the CEO of your business or maybe in developing some sort of skill, right? So maybe this is like investing in a copywriting class. Highly recommend doing that. Any sorts of books or anything like that. A trip that you have to take to go network or meet people, traveling to go to a conference, your attendance at that conference, and then obviously the fees that you have to pay to go to that conference. Those would all count as qualified business expenses, assuming you're doing this all properly. But, technically speaking, those all qualify. And so I think a lot of times people don't know that, getting mentorship for their business, investing in a business coaching course, even purchasing things like my legal templates and my ultimate bundle program, people ask me all the time if that counts as a business expense, and it does. The seventh way you can reduce your business income legally is to chat with your accountant about making sure you are capturing all of your home office deductions and all of the associated deductions that might come from working from home. So these things obviously change, year to year as tax code changes and all that kind of stuff. But I'm just going to give you some general pointers to have a chat with your accountant about in terms of making sure that the actual square footage of your home office space. So this has to be space in your home or your apartment that is solely dedicated to running and growing your business. This is where you do your work, right? I know you also probably do work like me on your couch and maybe in bed sometimes and at the kitchen counter and wherever else. But if you have a dedicated office space, you need to know the general square footage of that actual space. The next thing I want you to do is know what the total square footage is of your apartment or your house. And then just do the simple math, whatever that equation is whatever the percentage is that your office makes up of the total square footage of your home. So let's say it takes up, 10% of your home. It would be really helpful for you to go to your accountant and have all of your home bills, like let's say gas and electric, and heat, water, whatever else you have, internet for your house, you would then know that whatever percentage of your home office would possibly count towards, counting as a business expense. So again, this could all be really dependent on you, where you live, your business, your house, your whatever tax code at that time when you're doing this and when you're watching this video. But I just think it's something that's helpful to have in your back pocket so that when you go to do your taxes, you already have all of those numbers calculated, at least just knowing what percentage your office space is of your home. That will help alone. And then having the yearly total for all of those utility bills that you're drawing upon when you're working from home. Let me know in the comments which number of these you are going to look into or which one was the most helpful to you. I hope that you're able to reduce your taxable income even a little bit legally this year. With that, I want to invite you to watch my free legal workshop called 5 Steps to Legally Protect and Grow Your Online Business. In it, I teach you my 5-step strategy to legally protecting your online business through protecting your website, using contracts properly, registering your business the right way and the only way to legally protect yourself, and learning how to keep copycats off of your content. So you can click the link in the description to watch my free legal workshop, 5 Steps to Legally Protect and Grow Your Online Business. Thanks so much for watching, and I'll see you next week.